This video will help you prepare for your Chapter 3 tax return exam. We're completing the tax return in Comprehensive Problem 3-1 from your assignments. The taxpayer is Gordon Temper. He's single and was born in 1988, so that makes him around 37 years old. This just means that you won't have to worry about any additional standard deductions for him. Gordon operates a food truck called Mobile Peri Peri that specializes in South African food. When he's not operating his food truck, he parks it in an office park where he also has an office and keeps all his inventory. His revenues and expenses for 2025 are provided here for us, and we'll come back to these figures once we start working on the Schedule C. The problem tells us that he was a part-time cook at a steakhouse, so he has a W-2 that we'll use to find out what he earned and the federal income taxes that were withheld from his check. He also has 1099s reporting interest and dividends. The Mobile Peri Peri uses the cash method of accounting and the cost method for inventory. We'll use this information also on the Schedule C. His transportation log shows that he drove his truck 5,600 miles and listed 680 miles for his drive in his personal car from his office to his second job at the steakhouse. He paid for a subscription to Food Truck Monthly and had some travel expenses. He was divorced in 2017, which is before December 31st, 2018, so his alimony will have to be reported as income. His wife's got custody of the 5 children. One of those, Buffy, who's 17, lived with him for 5 months. So maybe he's thinking he can claim her as a dependent, but though he provided more than half of her support, she didn't live with him for more than half the year, so she can't be claimed as a dependent by him, unfortunately. We'll begin the 1040, let me pull that up, by entering the taxpayer's first and last name and the Social Security number. We're going to double check the spelling and the Social Security number because these figures have to be accurate before the return can be processed. We'll enter his address and leave the section about the presidential election campaign blank because he doesn't wish to contribute. We will mark the box indicating that he lived in the U.S. for more than half the year. His filing status is single. There was no indication that he had any digital assets, so we'll click the No box here. As I mentioned earlier, Gordon has no dependents that he can claim, so we'll skip down to the Earned Income section. So we know that he had a job, so there should be some income reported on line 1A. So if we go back and check out his W-2, he has wages, tips, and other compensation in box 1 of $23,500. So we'll enter that on line 1A, and we'll go ahead and bring that figure down to 1Z. Gordon also had some interest reported on a 1099. So if we go back to our problem, we'll see his 1099 INT has reported interest income of $3202. So back on the 1040, interest is reported on line 2A. So we'll enter the 3202 on 2A. Gordon also has some qualified dividends with a 1099 DIV. He's got ordinary dividends and qualified dividends. This form reports that his total ordinary dividends were $57.50, and of those, $5,500 were qualified, and on 2A, it's reporting capital gain distributions of $1,010. Now, what we need to remember is that qualified dividends are taxed at a lower rate as well as capital gains. So we'll need to keep that in mind when we start to calculate Gordon's tax. So now let's go over to the 1040 and enter these figures. For qualified dividends, on line 3A, we're going to enter the $5,500 from the 1099 DIV, and then $57.50 on 3B for the ordinary dividends. And then we're going to come down on line 7A and enter the capital gain for the capital gains distribution. And that amount was $1,010. Since the taxpayer's interest and dividends exceeded $1,500, we're required to fill out the Schedule B. So we'll go over to Schedule B, and as always on our extra forms, we have to enter the taxpayer's name and Social Security number at the top. Make sure you do that so you do not lose points. We've entered the name of the organization that he received the interest from. That's InvestCorp Bond Fund, and he received $32.02. We've entered that on line 1. We're going to bring all the totals, which is the $32.02, down to box 2, and then we also need to enter it again here on box 4. For the dividends, we've entered the organization from which he received the dividends and then the amount, and then we'll bring the total down to line 6. At the very bottom, it's asking about foreign accounts and trusts. So we know Gordon doesn't have any of those. So we're going to answer on 7A. No, he did not have any foreign financial interest. We're going to leave 7B blank because you only click that if you answered yes on 7A. So be sure and just skip 7B. And then on 8, we're indicating he did not have any distributions from a foreign trust. We're going to click no there. Now we'll get started with Gordon's self-employment income, and that's going to be reported on the Schedule C, the profit or loss from business. At the top, I've got Gordon's name with his Social Security number. The principal business is a food truck, and I've entered a code from the instructions. This will be located in the Schedule C instructions, but it was given to us in the problem, so I've entered it here. I've got the business name, Mobile Peri Peri, on line C, and the business address on line E. We were told that he uses the cash basis of accounting, and that we can just assume that he materially participated in the operation of the business. As a matter of fact, it kind of indicated that he did, and it was not just started in 2025, so no need to check. He did not make any payments that requires the filing of a Form 1099, so we'll click no. All right, now we're going to go back to our instructions and find our gross receipts or sales. The instructions tell us that Gordon had revenues of $81,835 rounded. So we'll bring that number over to Part 1, Line 1 of the Schedule C. So 81,835. There were no returns or allowances indicated, so we'll just bring that number down. Now we need to complete the cost of goods sold, but it needs to come from line 32. We have to show the calculation. In the instructions, we were given the figure, but we have to show the actual calculation here. So if we go back over to the problem, we'll see the cost of goods sold is 43,602, but we have to show the calculation. That's why we're given this inventory information down at the bottom. So the beginning inventory was 5547, and we added 43,132 with purchases. So he started the year with 5547, and he purchased this much more in supplies or inventory. Then he still has ending inventory at the end of the year of 5077. So the goods he had available to sell to his customers was the 5547 plus what he purchased of 43,132, and that's a total of 48,679. If he still has 5,077, that means he sold the difference. So the 48,679 that he had to sell less the 577 will give us cost of goods sold of the 43,602. So let's get that on our form now. The beginning inventory was 5547. Purchases were 43,132. No cost of labor is included, no material and supplies, no other costs. So we're going to add 35 and 36 to get line 40, which is the 48,679. That's his goods available for sale. His inventory at the end of the year was 5077. I'm just going to check that math to make sure it equals the figure we were given. And it does. It's the 43,602. So we're going to take the 43,602 and move it up here to the cost of goods sold on line 4. So if we subtract now the cost of goods sold from the gross sales, we'll get our gross profit of 38,233. There was no other income we needed to include, so we'll just bring that gross income down to line 7, 38,233. Now that we have the income, it's time to begin entering the expenses. So let's go back over to the problem and check out our expenses. He has truck rental of $24,000, so we'll put that under vehicles, machinery, and equipment. He has office rental of $8,600, so that'll be other business property rental. Advertising $989, insurance $3470, food license, that'll go under taxes and licenses, as $500. Uniforms, that'll be under other expense, $199. Dues of $100, that'll be other expenses. And then miscellaneous will also go under other expenses, and we'll list those out. There's a place for other expenses on page 2 of the Schedule C. But one expense we need to examine more closely is the travel expense. Travel expense is deductible as long as it's for business purposes. So let's read the details. He has travel expense of $1,605 for a trip to Steamboat Springs. It's a one-day seminar on South African cuisine. He spent the day at the seminar and went snow skiing for 2 days. So he spent 1 day working and 2 days playing. His airfare was $405, and his lodging was $300 per night, and the meals cost $100 per day. So now let's examine these individually. First, we'll start with the airfare. He spent 2 days snow skiing and only 1 day at the seminar. Now, if he had spent more time at the seminar than he did snow skiing, he could have deducted the $405 airfare. But since he spent more time skiing on non-business activities, he's not going to be able to deduct the airfare at all. His lodging was $300 per night for 3 nights, and his meals cost $100 per day, but he was only there on business for 1 day. The other 2 days were for pleasure, so he can only deduct 1 night of lodging, that's $300, and 1 night for meals. But remember that meal expense is limited to 50% by the IRS, so he can only take 50% of the $100, or $50 for the meal cost. So let's go back and get those expenses entered into part 2. The advertising expense was $989. Insurance was listed as $34.70. The rental of his truck, the vehicles, machinery, and equipment, was $24,000. The rental of his office space was $8,600. He had a license fee of $500. We determined that travel was $300, really just the cost of his lodging was allowed. And then the meals, half of the $100 was $50. And the other expenses, if we come over here to page 2, I've already listed them out to save some time, but they're the total of the other expenses, the uniforms, dues and subscriptions, and miscellaneous expenses that were given in the problem totaled $678. So we'll just come back and enter that in other expenses at $678. Now, before we total up all our expenses, I do want to talk about the car and truck expenses. When we go back to our problem, it stated that he had some car expense. Okay, Gordon provided a transportation log that shows that the truck drove 5,600 business miles, and he had mileage of 680 that he drove in his personal car from his mobile peri-peri office to his second job. Okay, we know that for transportation, of course, business miles are deductible. Transportation between one job to the next job is deductible, but commuting from his home to his office, or to from his office to home, if home is involved, that's considered commuting, and that is not deductible. So I was thinking that 5,600 plus the 680 miles times 70 cents, the standard mileage rate, would be deductible as car and truck expenses. However, I started reading the solution in See Now, and it said that since he did not provide mileage from his apartment to or from either work location, he was not allowed to take that deduction. So that is the reason over on the Schedule C on line 9, we have not entered car and truck expenses. However, if on any of your exams you see where there's business mileage given, make sure that you multiply that times 70 cents per mile and put it here under car and truck expenses. Unfortunately, Gordon wasn't allowed to take it, So now we will enter his total expenses. So that will be $38,587. That's the total of lines 8 through 27B. So his tentative profit or loss, if we deduct $38,587 expenses from $38,233 revenues, then we're going to get a loss. So make sure you indicate that loss with a minus. So it's a loss of $354. Okay, we'll bring that on down to line 31, and the instructions are telling us to enter this on Schedule 1, line 3. So we'll go over to Schedule 1, line 3, and enter his loss. Now on Schedule 1, there is some more income that we need to report. Schedule 1 reports additional income and adjustments to income. And we haven't learned about any adjustments to income, which is here. So we're going to just be completing page 1. And if you remember, he had alimony. Let's get back to the instructions. They tell us that Gordon was divorced in 2017, and that's prior to December 31st, 2018. So since his divorce was before December 31st, 2018, he does have to pay taxes on his alimony. So that is $300 per month or $3,600 per year. So over on our Schedule 1, alimony received will be $3,600, and for the date of the original divorce, we're going to put 1/1/2017. It doesn't say January 1st, but it just says 2017, so we'll put 1/1/2017. And let's see. On line 9, we don't have anything on line 8A through Z. So that'll be 0. And then on 10, it'll be the 3,600 minus the 354 plus the 0 will be 3,246. And we're told to carry this over to line 8 on the 1040. On that schedule C. Okay, line 8 will be 3,246. So now we can add up all his income to get his adjusted gross income. Get total income first on line 9. So that is the 23,500, 3202, 5750, 1010, and 3246. So he has total income of 36,708. We haven't learned about adjustments yet, so we'll bring that 36,708 to line 11A. And then on over to page 2. Okay. We know that Gordon cannot be claimed as a dependent. It doesn't matter. He doesn't have a spouse. He was not born before 1961 or blind. So we're going to go on down to line 12E and enter his standard deduction. For a single individual taxpayer, the standard deduction is $15,750. Gordon has no additional deductions, so we'll bring the $15,750 on down to line 14, and now we can calculate his taxable income. So we're going to subtract the $15,750 from his adjusted gross income of $36,708, and will come up with $209.58, $20,958. Now it's time to calculate the all-important tax liability. So line 16, make sure you always have a number on that line. Now typically we just go to the tax tables, but we have to remember that he has capital gains and qualified dividends. Remember, his qualified dividends are $5,500 and they're taxed at 0 up to around $46,000 for a single taxpayer. And he's also got these capital gains down here of $1,010 that are taxed the same way. So the way I would calculate this tax would be to take the $20,950 and then subtract these two other sources of income that are taxed differently. So I would take the $5,500 and subtract it from the $20,958 and then the $1010. And so that's going to give me income taxed at his regular rate of $14,448. So I would go then to the tax tables to $14,448 into the single column, and that gives me tax of $14.93. You can calculate the tax that way, or I will give you, let's see if I can find it, the tax qualified dividends and capital gains tax worksheet. And it takes you on a lot of hills and valleys, but you'll get the same number. And if you're not sure about doing it the way I showed you, plug your figures into this worksheet. So here is the taxable income, the $209.58. Then we were asked to subtract line 3A, which is the $5,500 qualified dividends, and then to deduct the capital gains of $1,010. And it says, are you filing Schedule D? We put no, we're not required for capital gain distributions to file a Schedule D. So we click no here. So total subtractions will be $65.10, and we subtract that from the $209.58, and we get the $14,448. We're supposed to enter an amount based on his filing status. He's single, so we'll put in the $48,350. We're going to enter the smaller of line 1 or 6. So line 1 is $209.58, 6 is $48,350. So the $20,958 is the smaller of the two. We'll enter the smaller of line 5 or 7. Line 5 is smaller at $14,448. We'll subtract line 8 from line 7. So 8 deducted from the $20,958 is $65.10. That amount is taxed as 0. So that is actually our qualified dividend and capital gains, but we'll keep going. Enter the smaller of line 1 or 4. So 4 is $65.10, 1 is $20,958. So we've entered the $65.10. Enter the amount on line 9, the $65.10, and then subtract, we get 0. Enter $533,400 if single. Enter the smaller of line 1 or 13. Well, we know line 1 is our taxable income of $20,958. Add lines 5 and 9. So 5 is the $14,448 and 9 is the $65.10. So that totals the $20,958. We're subtracting 15 from 14, so that's 0. Enter the smaller of 12 or line 16. Well, I'm assuming line 16 is the smaller, 12 is 0, it's all 0, so we'll enter 0 there. Multiply 17 by 15%, that's at 0. Add lines 9 and 17. 9 is 6510, 17 is 0. So the total is 6510. Subtract line 19 from 10. 10 is 6510 and 19 is 6510, so that's 0. Multiply line 20 by 20% and that's 0. So for 22, figure the tax on the amount on line 5. If the amount on line 5 is less than 100,000, use the tax tables. And we've already calculated the tax on the 20,000, the 14,448. We went over to our tax tables, remember, and found that it was $14.93. Okay. So $14.93 was the tax. Add lines 18, 21, and 22. So 18 is 0, 0, and the $14.93 gives us $14.93. Figure the tax on the amount on line 1. Okay, that is the $20,958, and of course we know that that's going to be higher than the tax on the lower amount, but anyway, that tax is $22.79. And the tax on enter the smaller of line 23 or 24. So of course 23 is the $14.93. So now we can finally get back to our 1040 and enter on line 16 the $14.93 as our tax liability. So as you can see, using that capital gains and qualified dividends worksheet is pretty tedious, but it will help you calculate the correct tax liability. So we're going to bring that on down to 22 because there are no other taxes to add or credits. So bring the $14.93 there and bring it on down to 24. Now we need to go and check out his W-2 and see how much was withheld from his job at the steakhouse. Okay, so here's his W-2. Federal income tax withheld was $2,000. So he paid in through withholdings $2,000. So he's prepaid $2,000. Bring that on down to 25D. Okay, he has no other prepayments. So his total payments are just the $2,000. So he's paid in $2,000. He only owed $14.93. So he's overpaid his taxes. So he's getting a refund of $507. And he would like that $507 refunded to him.